Well, Sri Lanka is passing through a period of worst economic crisis. It is facing an hyperinflation. The foreign exchange reserves have depleted to a level where it can't even finance its import of essential consumption. It is unable to pay its old debts. So it is almost on the brink of debt default. So the prices of essential commodities like rice, petrol have shot up in an unprecedented manner. So there is huge queues before the petrol bunks. So there's a complete economic collapse of Sri Lanka. So what are the reasons for the Sri Lanka's economic crisis? First, there is a structural weakness in the Sri Lanka's economic model. It primarily relies on primary commodity exports. So Sri Lanka exports tea, rubber, etc. So the primary commodities. Any country that exports primary commodities and imports finished goods will never develop because of this colonial mode of exploitation. So Sri Lanka still retains this colonial mode of production where it exports the primary commodities. Well, the other two important sources of revenue for Sri Lanka are the tourist arrivals, that is another source of revenue, and the foreign remittances by expatriate Lankans. So these are the three sources of foreign exchange for Sri Lanka: export of primary commodities, tourist arrivals, and the remittances, foreign remittances. Well, so therefore Sri Lanka uses this foreign exchange thus earned to even import essential commodities, including food. Sri Lanka doesn't even produce enough food to feed its population. So it spends foreign exchange even to import food. So this is the structural imbalance in the Sri Lankan economy, and it failed to revive this economic model which resembles a colonial vestige. Then comes Sri Lanka faced a war for 26 years. So the war, 26-year civil war with LTTE has ended in 2009. So the country faced huge budget deficit during this protracted war. And in 2008, the world has witnessed the global financial crisis. And the global financial crisis resulted in the capital flight from all the emerging economies, including Sri Lanka. So therefore, what really happened at 2009 was that due to capital flight and due to huge budget deficit, Sri Lanka went to International Monetary Fund for loan. So IMF has given loan around $2.6 billion of loan to Sri Lanka in 2009. So no loan of IMF is without conditionalities. So along with the IMF loan, there were conditionalities. The conditionalities constrained Sri Lankan government to spend for its people. So between 2009 and 2013, Sri Lanka was growing at 8 to 9%. This was the post-war development. There was a pent-up demand, and Sri Lankan economy was looking little better post-2009. But what happened in 2013 has spelled a death knell to Sri Lankan economy. In 2013, the world has witnessed a crash in the global commodity prices. If you follow the global commodity prices, they have a tendency to be volatile. So there is always a volatility associated with the global commodity prices. So when global commodity prices fallen sharply in 2013, Sri Lanka faced a serious challenge of foreign exchange because it was relying essentially on the export of the primary commodities. So it was earning very less from its commodity exports. This happened in 2013. And this led to, yet another economic crisis superimposed on its structural deficiency. By 2016, so the Sri Lankan government went for another loan of IMF for around $1.5 billion. So along with the loan, there were again conditionalities. So the earlier loan stipulated, the first loan stipulated government that the budget deficit should not exceed 5% of GDP. Now the fresh loan stipulated that the fiscal deficit should not exceed 3.5% of GDP. So this condition has stifled the Sri Lankan government's ability to spend and expand its economy. And there were also conditions like taxes should be reduced, tax reforms have to be introduced, there should be free play for foreign investors, the Sri Lankan exchange should be made flexible, the public enterprises should be commercialized. So there were all kinds of conditionalities which IMF is characteristic of. So this resulted in a very serious blow to the Sri Lankan economy. If you look at the 3-year period between 2016 and 2019, when the IMF conditionalities were implemented, so the second set of loan was executed between 2016 and 2019. So during this period, the GDP of Sri Lanka has fallen from 5%, the growth rate of Sri Lanka has fallen from 5% to 2.9%. The saving rate declined, the investment rate declined, the government revenues have significantly fallen, the public debt has significantly rose, and the foreign exchange reserves plummeted, and there was all-round economic crisis inflicted on Sri Lanka thanks to the IMF second loan. So in 2020, again Sri Lanka faced shocks. The first shock was in the form of COVID. COVID has led to a virtual, COVID has resulted in a virtual a virtual closing of airports. Almost all the civil aviation sector has come to a grinding halt, and the Sri Lanka's tourist incomes have completely vanished. It has completely eroded because there were no tourists during the COVID period. So not only that, the COVID period has also seen a slump in the global demand, seriously hurting the Lankan exports too. So this was the COVID impact. And meanwhile, the present government of Gotabaya Rajapaksa came to power in 2019. Gotabaya Rajapaksa promised a reduction in taxes. So it was also an IMF condition. So in 2019, the Rajapaksa government implemented a massive reduction in taxes. The GST and VAT as incomes have offed, personal income taxes have been reduced, and there were many other taxes were completely abolished. So this led to sharp decline in the government revenues, and the government was completely incapacitated of spending. So these two shocks, the shocks of tax fall and again the COVID, has again made a body blow to the Sri Lankan economy. And then came its organic farming. So Sri Lanka was spending huge amounts on import of fertilizers because Sri Lanka doesn't produce any chemical fertilizers. So the Sri Lanka government has imposed a sudden 100% shift to organic farming. Well, the Sri Lankan decision to shift to organic farming was not because of any environmental considerations. It was essentially to reduce stop spending foreign exchange on import of fertilizers. So Sri Lanka completely banned fertilizers. This resulted in a massive fall in agricultural productivity. So what was intended was to save foreign exchange by banning fertilizers. But what really happened was there was a further reduction in the foreign exchange earnings because the tea and rubber productivity has sharply come down. As a result, the export incomes have come down, and the agricultural productivity has come down, and Sri Lanka has to spend more on food imports. Meanwhile, the public debt of Sri Lanka has increased from 94% of GDP in 2019 to 119% of GDP by 2020. We hear the stories of how Sri Lanka owes a huge debt to China, etc., etc. We hear in the newspapers. So therefore, the Sri Lankan economy has been impacted by several factors. First, the structural deficiency in the Sri Lankan economic model. Two, its implementation of the conditionalities imposed by IMF as Sri Lanka took 2 sets of loans from International Monetary Fund. Three, the misguided policies of successive governments. And four, it's the impact of COVID. So all these 4 factors have led to the present day crisis that is still deepening, and Sri Lanka is now caught in an economic quagmire of economic crisis.